Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in today. And this video is being recorded on the early evening of Wednesday, October 16th, 2024. In this video, I'm going to talk about potential short to medium term price targets in the miners, in the miner ETFs, because over the past few weeks I've been talking about what are those targets for gold and silver, and they are 3,000, 35 for silver, maybe 36, 37 for silver. That does have some potential. So thinking about those targets gets me thinking about what are the similar or corresponding targets in the mining indices. So I'm going to talk about that, and I'm going to talk about one sell signal that we should use over the coming months to give us a sell signal and help us identify when we should be taking profits. Let's get to the video. Okay, so very simply, we're looking at the monthly candle charts for GDX here and GDXJ. Now, GDXJ, you can get data going back to, I think, the beginning of 2004 on the MVIS website. That's the parent company of GDXJ. Kind of bothers me that no charting platforms carry that data, but I put it in here on stock charts. It's a high-level service thing that they offer, and so I have lots of charts like this with my own data. But anyway, so GDXJ here, GDX. So we know that based on the monthly candles, GDX, it already broke out above 37.5. That's significant. We can see, look, from 2006 to 2013, this was a really significant level. Market peaked here, and then it failed here several times. Earlier this year, tested it once. In the past 2-3 months, it was trading around 37, but gradually rising. So now we're pulling away. We do have a little bit of resistance here. This is right about 41, where we are right now. So, I mean, you can also see it on the daily and weekly charts. This is the remaining resistance with respect to here and now. And assuming GDX breaks that, it can move up here to this resistance right around 47.5. And we can see, again, from 2008 to 2012, this was a significant resistance level. So here we are at 41, 47.5. So 6.5 divided by 41, what is that? 15, 16%. So pretty good move for GDX. But when the market's trending, you're always going to do better. And I shouldn't say always, but most of the time, in most cases, you will do better in GDXJ and the silver stocks, which I'll get to. GDXJ does have a few silver stocks in it, so it's a little more correlated to silver than GDX. But anyway, so here's the monthly chart for GDXJ. Broke above this level here, 47. We can see since 2013, this was a very important level. The market has spent not that much time above 47. Again, go back 11 years or so, and it's only spent this time right here, at least in monthly terms, above 47. So the breakout at the end of September, that was confirming a 3-year breakout in GDXJ. But anyway, we've got a little resistance here, call it 52, you can see on the monthly. Then we have some resistance here around the highs, which, call it 59 or so. And we can see that, look, this is a significant level because, look, from 2006 to 2013, this was a very significant level. We're talking about the low 60s down to 59. So very significant level. So here is GDX at 50, 51. Can it go all the way to 63, or maybe let's just say 60? So that's 9 divided. So that's, almost a 20% move from where we are now to test this resistance. So that's where we are for GDX and GDXJ. And I'll get to SILJ here at the bottom. I tweeted about this yesterday. I may have mentioned it in my Friday weekly recap. You see the same thing in SIL, but this is what's called a continuation head and shoulders pattern. Typically, you see inverse head and shoulders. They're at the bottom, or just a general head and shoulders. It's a topping pattern. But this is a little rare. Rare is kind of a strong word to use, but you do get sometimes a continuation head and shoulders. We actually saw that in gold go back to, I think, 2008, 2009, that long pattern. That was a continuation inverse head and shoulders pattern. Now, this because it has the double bottom here at the head, it's actually called a complex head and shoulders pattern. So I'm not trying to show off here, but the name of this pattern is this is a complex, or no, this is it's a complex inverse head and shoulders continuation pattern. So that was a real mouthful. And it's upward sloping a little bit. So this has quite a bit of strength, but you go down here, I mean, this is 10.5, maybe 10.7. And if you measure it from here, 13.5, that's getting up to at least 16, maybe even 16.25. So that's, you get to 16.5, that's 3, that's over 20%. That sums up where we are. Roughly speaking, we could say 15% for GDX, 20% for GDXJ, and you could go a little higher for SILJ, say 22%. And those are the short to medium term upside targets for the miners. But I wanted to talk about these daily charts for a second. Already covered how bullish this pattern is here. And I also really like the action in GDXJ. I mean, this is an upward sloping consolidation, and it came down here, corrected, nice solid move. It started in the middle of last week, and so that's holding this level here, where we could be seeing similar action here, where resistance here, little support here the last couple days. If the market, the longer it holds above here, there's chances it could make a move like that. That's where we are for the short-term action in the miners, definitely favoring GDXJ and silver stocks. And that's where we are with respect to the targets. Before we get into the sell signal, I want to encourage those of you who have not and do own junior gold and silver stocks, check out the Daily Gold Premium. This is our publication where we cover the juniors that we are investing in. Most of them have been doing really well this year, as you can imagine. But one thing I want to say and tease is that I do have a top 10 company list. I do have a top 10 company watch list. But I also want to talk about some stocks which I think are future top 10 companies in the next year or two. You want to try and find those companies before they start to make a move, and then they've gone up a bit. They get into the top 10. And there's a particular type of company that I like, and so I'm not going to mention that or tease that here yet. But I am looking at the type of company, or at least prospective companies now, that in a year or so, they will fit the type of company that I'm looking for, if that makes sense. In other words, I'm just looking for the future big winners of tomorrow, the next year and the year after. And I do think there's some out there. So I'm looking forward to talking about that in my service. With that being said, would love to have you come aboard. And let me get to the sell signal and the rest of the video. So this is one good sell signal that we can use. And it's looking at the amount of new highs in GDX or GDXJ. I have my own personal data for GDXJ. It does look pretty similar. But you look at these new highs and then you smooth it with a 20-day moving average or 20-day exponential moving average. Here, this is just a simple 20-day moving average. So we're looking here, and I circled where some of these peaks are. And if you look at the moving average reaching 25 or 30%, that tends to be a sell signal for GDX and GDXJ. So again, this is the 20-day moving average of the new highs in the market that you're looking at. And look, all the time, these sell signals, they're not going to be perfect. Here's some examples. This move from 08 to 11, we never got up to that point. We did have some peaks here, near 20% or a little bit below. I think this might have peaked at 20%. But during that period, the market never got to this point here. The same thing could be said right here at the end of 03. This was actually an important peak, early 04, end of 03. The market did not get to that point. So the point is, every indicator is not going to work perfectly, but this is a pretty good one if the market gets really overbought and you get this huge burst of buying over like a month or two. Then you will see it spike like we got here, 2016, 2019, 2020. And so this is where we are here and now at about 10%. So we are in good shape. But if we see the miners move higher, 15 or 20% move in the next few months, we get to those targets, and the amount of new high, if this new high indicator is at 20% or 25% or 22%, it's just something we can look at and realize that, the market is probably going to take a rest for more than a month or two, or could have a sharp correction for a month or two. So this, I mean, there are several other indicators I use, but this is really one of the best. Looking at the new highs in GDX and GDXJ, smoothing it out with a moving average, that will help you get sell signals and help you identify when you should be taking profits or selling. So with that being said, I'm sorry this video went a little longer than I anticipated, but thank you so much for staying with me all the way until the end. And with that being said, leave a comment. Let me know what you think. Would love to hear your thoughts. And I'll talk to you guys again on Friday for the weekly recap. Hope you have a great rest of the week. Thank you.